Double entry bookkeeping. Businesses use a system called double entry bookkeeping to record their financial transactions. This system is believed to have been developed over 600 years ago. A personal checkbook is an example of a single entry bookkeeping system. Each time you record a payment or a deposit, you write it down once and add or subtract the amount from your bank balance. Each entry will either increase cash or decrease cash. Take a look at this example. Let's say you have to pay rent. So you write down rent in the description. The rent costs $500, so you subtract $500 from your cash balance in your bank account. And if you start it with $700 in cash in your bank account and subtract the $500, you're left with $200. You then pay your utilities at a cost of $125, so you subtract the $125 from the $200. So now we have a running balance of $75 remaining. Then you get paid. $1,000 is deposited into your bank account, and now your cash balance is $1,000 plus $75 for $1,075. Pretty straightforward. But it's easy to make a mistake using single entry bookkeeping. This could result in the balance of money available to be incorrect. A business needs a system which will not have this potential for error, and a business has to categorize all of its transactions very carefully. Double entry bookkeeping solves these challenges. Double entry means that each item gets entered twice. Once to record the impact on cash, and once to record the category of the transaction. By recording the amounts twice in different subtotals, the system tracks finances more carefully and cross-checks the totals to make sure they're the same. This is similar to how a crossword puzzle requires letters to fit both down and across the puzzle. Here are 3 transactions recorded using double entry bookkeeping. Notice how each transaction has 2 entries, one to show the effect on cash and the other to show the effect on a related account. For example, when a business buys an office chair for $50, cash is reduced by the $50 used to pay for the chair. And assets, which is a type of a business account, are increased by $50 because the business now owns a chair valued at $50. An asset is an object of value, and that, in this case, is the chair. The business did not lose $50. It converted $50 of value from cash to an asset. Let's repeat that. When the business buys an office chair that's worth $50, they pay $50 in cash, which reduces their cash by $50, but they get something of value, an asset, in return, which is that chair. So now they're increased by that same $50 that they just paid out. In terms of total value, it's the same. It's zero. There's no difference. You gave 50 and received 50, but you recorded it in your counting system as shown in this table. So that's the office chair example. Let's take a look at selling a product. So a business sells a product to a customer who gives the business $100. So you increase your cash by $100. But you also have an account called a revenue account, sales revenue, which is increased by $100. This will become clearer later when we dive into accounting more deeply. Now let's say a business buys a product and it's going to resell that product later. So the business buys the product for $75 in cash, so we reduce cash by $75. And that increases the assets the business owns by the same $75. So they purchased something for $75 and received that same thing of value, of the same value of $75. So it balances in 2 different accounts, the cash account and whatever that other account is. In the case of the 3 examples we've seen here, the other account in some cases is assets, in other cases is revenue. We'll learn more about accounts later. So double entry bookkeeping reduces the possibility of error because if an amount is entered incorrectly, it might cause the accounting to unbalance, which can immediately be seen and corrected. Traditionally, bookkeeping was done using paper books and pen, but most businesses now use accounting software to save time and provide better reporting. BusinessXP is the fastest and most inspiring training ever invented for future business leaders and entrepreneurs. Discover game-based experiential learning at business-xp.com.